And where I start in the process is I take the outlook of the International Monetary Fund, then I run my models, and then I get to where I think I'm at the beginning of that process right now, but I thought I would show where the base case outlook from the International Monetary Fund is today, and where I think I'll nuance it a little bit, and where I think my models might move to be a little bit different from their view. Not much, but different enough to be important. What's obvious, firstly, when you look at the complete outlook, is there is no recession anywhere. There is no recession in the US. Growth is growing at 2.2%. After an absolutely miserable period in the euro area. God knows why anybody would want to join the euro area, but you can see that there is recovery, modest recovery in 24 to 1.1% growth and 1.6% growth next year. China, the IMF thinks growth this year is 4.8%. I think 4.6 is where it's running. And they think that it'll recover to 4.5 next year, and I think 4.3 is more likely. And that's really because of continuous weakness in demand, consumer demand in the Chinese economy. But those numbers are actually, for an economy the size of China, I mean, they're fantastic numbers. I mean, like it's 4 times as fast as the German economy is growing, or the Japanese economy is growing, and almost twice as fast as the US. So, like, they're extraordinary numbers. The star on the block for the last couple of years in terms of growth has been India. Grew at 8.2% last year, 7% of this year, and will grow between 6.5% and 7% next year. So that's really the knockout economy for high growth now, and will be, as I say, for the next 20 years, because their working age population is increasing, not falling as it is in China, and you'll see that economy continuing to grow, for decades to come. In Australia, growth was pretty soft this year, and that's really because we're coming off a record high commodities boom. So growth around about 1.2% this year. IMF has at 2.1% next year. I think it's more like 2.5%, but it's still fairly modest growth in comparison to Australia. But it is a recovery, interestingly enough. And when we look at consumer price inflation, we see that inflation is pretty low and falling in most places. There is one exception, of course, and that's Australia, as we go from 25 to 26. In the US, headline CPI falls from 2.3% inflation this year to 2% next year. The euro area falls from 2.4% this year to 2.2% next year. In China, there is actual deflation last year, and inflation this year is about 0.9% or 1%. Again, the problem is lack of consumer demand in China. But usually the growth of inflation is 2% or slightly lower in China. And as the economy recovers, it should struggle up towards that. India, their inflation target is 4%, so they'll hit that this year and next year. In Australia, the IMF thinks that inflation this year might be 3%. I think it'd be a touch lower. This is headline CPI, probably about 2.7% this year, and just a smidge higher than that, 3.6%. Next year, probably 3.7%. But what you're seeing here is the world has gone back, or has come back, to reasonable growth. The fear of recession is behind us, and there's a good economic future for pretty much everywhere, wherever you look. Whether you look in the US, where growth is probably going to be higher than the Federal Reserve estimate. The Federal Reserve estimate is 2%. IMF think 2.5%. I think that's perfectly reasonable. Matter of fact, that's bang on where my model is, 2.2% for next year. Euro area recovering. India very strong, and Australia recovering. So the outlook in the world is pretty good. Problem could be that the market is already aware of that.